Hello everyone, welcome to Bitcoin Not Crypto. My name is Forrest Stevens, and in today's video, I'm going to be comparing Bitcoin and real estate. And Bitcoin and real estate are an interesting one because I think a lot of people have misconceptions about earning yield, basically getting rent from real estate, and that Bitcoin is not a yield earning instrument. And a lot of people also don't realize that real estate is being used as a store of value. So we're going to get into all of that. But before we do, if you're interested in buying some Bitcoin, I'm going to tell you where I buy mine, which is Bitcoin Well. They're available in Canada and the US. They have no fees and they have the smallest spread on Bitcoin in Canada. They also have a non-KYC options. They're very privacy focused. And the other thing is about them is that they're not an exchange. They're a non-custodial platform. So when you buy Bitcoin, they send you it directly, either on-chain or in Lightning Network, to your own wallet addresses. They never hold your Bitcoin for you, which is fantastic. You don't open yourself up to the counterparty risk of these exchanges. And they're just a great company. So use my link in the description and you'll get some rewards for doing so, and I get a small kickback which goes to support this channel and more videos like this. So first we have to talk about a store of value. Now, why do you need a store of value? Well, unfortunately, we cannot save in our nation's currencies. Our nation prints currency beyond beyond what we know, probably at really high percentages, and that decreases the value of that currency because more of it is being added to the market while demand is staying relatively the same. Now, this makes it so that other commodities, other goods and services actually start costing more in a nominal amount, but maybe wages and the amount that you earn does not increase as much as the currency is being debased. So it is a bad system and it is not working. Fiat is looking back on it, and looking into the future, we will probably look back at fiat and realize that it was a poor, terrible experience and experiment, and that it was just a blip between the hard money standard of gold, which is kind of the analog old physical way of having sound money, and the new age of Bitcoin digital sound money, which improves on all of the flaws of gold. And fiat was just this tiny little stepping stone in between those. But currently we live in that stepping stone generation, and we have a huge amount of opportunity because there's this new emerging technology which we can get onto before it's been fully adopted, which is Bitcoin. Now in there, however, there's no way to save. There's no way to save except moving to a sound money standard or to assets that appreciate more than the raising costs of goods and services. So you either have to start gambling in the market, the casino of the markets, and understanding PE and free cash flow and business prospects into the future, and trying to predict the future, basically whether a company will become more or less valuable and their stock will either, hopefully their executive team doesn't dilute or doesn't pay back their executives higher and their wages more, and they don't dilute the shareholders by issuing more stock. And you're just opening yourself up to so many risks by entering the market, of course. Some people do fine in there, but if we talk about what people are kind of averaging, they're competing against the S&P 500, which is the 500 biggest companies in America. And that on average over a long enough period basically gets 10 to 12 to 15%, depending on different time frames, annually. And you could argue that inflation is pretty close to those numbers, so you're staying either even or just slightly ahead, and that entire time you have no access to your capital unless you sell those shares and access that capital, and maybe you take a tax hit, and maybe you're in a higher tax bracket because nominally all of these things have gone up, but the amount of goods, again, you will not be able to buy. So there's this real nice trick that happens with inflation, because those tax brackets, those don't really go up as well as much as the debasement happens. So you'll get pushed into higher tax brackets, and you're still not being able to buy as much. So it's really not a good place to be. And Bitcoin is the solution. We need an out. And, people might have thought, okay, well, what about gold? Well, gold is being demonetized. Just as silver got completely demonetized, now it's valued basically only on its intrinsic value as an industrial metal and as a jewelry metal and in its physical use cases. Gold has some use cases as well, jewelry and electronics, just as silver and many other metals have. But it also has a monetary premium on it because historically it was used as a money. And it was used actually less than silver was in its past. And it was actually just held and used to settle big transactions. Now, this is kind of why people talk about Bitcoin being digital gold, and that is one sort of really narrow analogy to define Bitcoin. And in that kind of case, it is relatively a sound analogy because it'll be held and it will be used for sort of bigger transactions. Now, the Lightning Network is almost like digital silver in the fact where you can send a lot of it you can send it really quickly, you can send it for really small fees, and you can use it for merchant transactions and things like that. So it allows for the movement of Bitcoin in a more efficient way than the on-chain Bitcoin transactions happen. But those on-chain Bitcoin transactions are going to be the most secure way to move value out of anything in the world. Now, let's just be clear about that. Bitcoin has created a network that is the most secure network ever created in the entire world. Okay, so this video is not about Bitcoin versus gold, though. I'm just explaining sort of how people need to avoid inflation. Now, one way that people have avoided inflation is to buy assets that appreciate because of inflation. And one of those assets, of course, is real estate. Real estate is an interesting one because they're making more of it. There is a stock to flow. It is unique in its way of all real estate is different, but it is not, does not have a limited supply. New techniques and technologies allow us to build higher buildings, increase capacity, and in areas that otherwise we wouldn't be able to build in, like swamps and deserts and things like that. And this is just an asset that is complex, but people like it because there is a utility need for it. And there's a lot of different ways in the way that the supply becomes slowed down, right? There's a lot of regulations that slow the amount of real estate being added into the market. And that means that the price of the current real estate will go up. There's also a large demographic of population that is moving around and demanding real estate in certain regions, which increases the value beyond even the currency debasement of those nations. Here in Canada, we have a huge demand for real estate, and real estate is becoming and has become basically the saving mechanism for a large majority of people. They think that their value, their money is going up, their net worth is going up because they hold real estate. They either hold it as their primary house or they do it as an investment. And this is where it kind of becomes interesting. Real estate in a lot of ways is a good investment because of its limited supply, because of its ability to appreciate beyond inflation, and because there's a financial system that allows you to get pretty close to the money printer and pretty close to the banks, right? And the banks allow you to take out a large short on your nation's currency to buy real estate at a really low interest rate. And the beauty of inflation is inflation works in its kind of inverse way. Inflation on savings, it degrades the value of the savings, but inflation on debt, it decreases the value of that debt. So if you hold a huge amount of debt for a long period of time, that debt actually becomes worth less and less every single day, every month, not because you're paying that debt down, but because the dollar amount, the dollar amount stays the same, but those dollars become worth less, and you can earn more dollars over time because wages eventually increase as well as all of the inflation of everything else. It makes a lot of sense to short the dollar to buy a harder asset, one that is increasing in value. So there's this nice kind of dual thing that's happening with real estate, is a low interest rate on a fixed supply sort of asset and a short on the dollar, and you're able to combine both of those and have this asset do really well over time. The other thing too is, on average, people hold real estate for 3-4 years, a lot of times a lot longer than that. When you hold stocks and different assets, you might trade in and out of them. You might try to jump on a faster horse. Some of the best performing portfolios are actually of people that don't do that. They don't move the assets, they buy and hold. And that's kind of what real estate forces you to do. It forces you to buy and hold. And that in that way, people see a large nominal increase in their value when they do end up selling it. So it kind of works out. Just because it's an investment that somebody is kind of almost forced to hold for a certain period of time. Now with that, though, real estate is also incredibly risky. Real estate is risky because you have a huge amount of debt, you're leveraged, right? Debt equals leverage. So you're really leveraged when you buy these things with big mortgages. You also, there's no ticker. There's no ability to check what your value of your house is actually worth moment to moment, unlike Bitcoin, unlike even the stock market that is open at least 5 days a week, Bitcoin 24/7 trades. Now, you don't know what it's worth, so you don't know if the market is going down or up. I mean, you have to compare it to sort of similar properties and all these kind of things. There's also property taxes that you have to pay. There's also fees, selling and buying fees, and real estate agent fees, and taxes and lawyers for selling these things. There's also the depreciation that happens as it's a physical thing that is being worn down by the weather, the world, and by entropy. And, you know, nothing is permanent, everything needs maintenance. And so you have to spend money to even maintain the property in its current state. And then if you wanted to improve it more, you have to even spend more money. So it is really not the perfect asset. Bitcoin, however, there's no maintenance fees. You buy it, you transfer it to a wallet, you hold it. There's no property tax. There's no taxes until you sell. There's capital gains, which in the case of real estate, there will often be capital gains as well, unless it's your primary residence. Here in Canada, you can kind of avoid that. There's a little bit of a tax advantage opportunities potentially with real estate. However, with Bitcoin, there may be as well throughout time. And there might be some other options to use it as collateral or capital, pristine capital. It's just the fact basically that I'm getting to is that there's no maintenance cost to holding something like Bitcoin, but there's a lot of maintenance cost to holding something like real estate. Now, the thing that somebody might argue with is, okay, but I get a renter in there. They're going to actually maybe, you know, my mortgage is $1,000 a month. Maybe I can basically, my mortgage and expenses, you know, insurance, property tax, heating, maintenance, all of this comes to $1,000 a month. You know, I'm just using a round number here. Getting anything for $1,000 would be crazy at this moment. And maybe I'm charging $1,100. So at the end of the month, I'm getting an extra $100. So I'm actually making money while paying my mortgage and all these expenses, and then I can sell it at a later date. That's great. You know, that's a yield on your investment, and you still have to deal with the headache of basically running a business. If you have a renter, if you have a rental property, you are now a business owner. Now, maybe that takes a few hours, a week, a month, a day. I mean, who knows? It depends on how much you outsource, how much you delegate, how much you build that business, right? You're now thinking it as a business. Just as if you're investing in the stock market, you have to be thinking about it as investing, as sort of this casino of markets. If you don't want any of that headache, you could simply just buy Bitcoin. Now, Bitcoin doesn't have a yield in the sense of getting that rent every month, or even with other cryptocurrencies, there's staking, which is just completely not something that works for sound money. But Bitcoin and yield. This is such an interesting thing. People think, okay, well, how do I get yield from this? I need yield, I need monthly income, I need a quarterly income, whatever. Yield is in a lot of ways, we think about yield in the sense of dividends, right, from a business. That is their cash flow, or even they might even have debt to pay their dividends, certain companies, where they have some cash on hand that they pay you, and that cash leaves their reserves, and the value of that company gets lowered by the amount of cash they pay out. So that money is not free. That money is just part of the company, and you're extracting that value out of the company. So just in that same way, if you wanted yield on your Bitcoin, you could sell a portion of it, just as they are selling a portion of their assets to pay you that dividend. You could sell a portion of it and pay yourself, right? And use that. You could either use it directly, or you could sell it into fiat and use that fiat. And real estate is kind of the same way, right? I talked about it being a business. If you are able to take some money out, then you're taking money out of that business. Maybe you need to build the reservoir of that business cash up to pay for a new roof, a new stove. The renters moved out and they've broken a door, they've punched a hole in the wall, right? These are all things that can happen, and you need that cash reserves to be able to pay back into the business to improve the business, which is the real estate itself. It's basically the same thing, right? And yield is really just something that you're taking out of the business. And if you're making more rent than your expenses, then you have basically a free cash flowing business. But you could have started a business in any other way. It doesn't need to be real estate. So it's very interesting to debate these things, and I think yield is the only part of the conversation that becomes somewhat compelling to real estate, but it's really only compelling if being a real estate owner and a landlord is something that you want to do as a business endeavor. If that is something that's not interesting to you, and you'd rather start a different business, or you'd rather work in some other way, then do that instead, right? Like, this is not something you have to do. You do not have to invest in real estate to have an asset that appreciates beyond inflation. There's something called Bitcoin, which is a free, permissionless network that is growing in adoption and will basically become the base layer currency and capital for the world. And we can get on that because we are lucky enough to be alive in the transitional period where everything else falls to zero compared to it. And we are just on that uptrend. And that's just a reminder to check out that Bitcoin well. There's also a Discord. If you're interested in talking to me one-on-one, there's a channel in there where you can book a call with me. And of course, just check out the links in the description. Stay tuned, subscribe. If you have questions as well, you can comment them. If there's something that I didn't clearly express, feel free to question it and I will try to comment. And lastly, I am creating a Bitcoin film called The Land of Volcanoes and Bitcoin. It's about El Salvador's historic adoption of Bitcoin as legal tender. And I'm funding that through Geyser, which is a Bitcoin-only crowdfunding platform. So if you want to be maybe it'll be your first payment or transaction with Bitcoin over the Lightning Network, you can actually donate to my film. So check that out, link in the description. Thanks everybody for watching, and I'll see you on the next one.